Hello there, everyone. Welcome to this special presentation titled Climbing the Wall of Worry. My name is Steve Chappell, the Director of Trading Systems Development here at VectorVest, and I am privileged to give you this presentation, a very timely one at that, and that I think the big question on everyone's mind right now is, will this rally continue? This is sort of the natural psychological battle investors face when markets have charged up off the lows and are perceivably maybe a bit over their skis, which if you're not a skier, means that you're likely to have a tumble. VectorVest is well suited to address these concerns, and we provide information that simply nobody else has. And this information will allow you to better judge whether the fear is truly justified or the blast off of what might be a remarkable rally has just begun. And so in order to fully address that, we're going to take a look at two very important aspects of being able to buy low and sell high consistently based on this information. And of course, the enemy of being able to buy low and sell high consistently is emotion. And we all fall victim to it, even us at times. But what we need to do is let VectorVest information be the guiding light in the sea of darkness, right? So there's no crystal ball for the future, but there are indicators or information in VectorVest that are going to be very helpful in establishing likelihood for the markets. Is the market more likely to continue climbing or not? And so we're going to take a look at two important aspects of that. The first being the investment climate. And so I would label this, Dr. DeLito taught me many years ago, as the strategic outlook, the big picture. This information is going to provide insight on what's likely to happen over time, over the longer run into the future. And then we're going to take a look at the tactical, realizing that there's bumps in the road in any overall movement in the stock market, whether the direction is up or down, right? So there's times to be fearful and protecting profits in the best of raging bull markets. And there's also times where you can capitalize on some good upside gains in the worst of bear markets. And so knowing both is critically important. And we're going to spend some time detailing all of this to you right now. Okay, so let's jump over and do it. All right, here we are at the home page, and we're going to start with the 30,000 foot view. We're going to start with the big picture. We're going to start with the climate information. And so where do I find it? What does it mean? How do I interpret it? How do I use it, right? Let's get right up here to the top. I'm going to go to the views. I think that's the best place to start. And you want to go to a Friday view, as that's our more comprehensive newsletter with all the sections. So it's only detailed on the last trading day of every week. Now, if I slide down the newsletter, eventually we get to the climate section. And when we get here, we're going to detail all of the major economic reporting that has transpired throughout a given week. In particular, information on interest and inflation. Of course, earnings being largely detailed these days well up into the essay portion with the ETI readings. But the most important part to keep your eye on here is the big picture, and that is the current market scenario. And right now, we are still in a case 3 bull market scenario. And this is one that rarely happens. And this is a situation, and this should make sense based on what you've been seeing here lately if you're paying attention, that earnings and interest rates are still rising. Now, the Fed's beginning to come off the pedal a little bit, at least in terms of the amount of adjustment on interest rates, but still rose a quarter point just this last week. Earnings have remarkably hung in there, and inflation has in fact begun to fall. And so that's where we find ourselves, friends. And so all the talk on is the bear market going to continue? Well, as far as VectorVest is concerned, we have not yet even reached a level where earnings has deteriorated enough, right, on a forecasted basis to signal that the big bad bear market has actually come. And when you think about stocks in the stock market these days, there are still stocks trading at incredible prices, way, way, way above valuations. And friends, at the end of a tried and true bear market, that just isn't the case. So let's hope that the big bad bear will be staved off here, and let's look at key indications in VectorVest to let us know that the coast is clear, or we need to be mindful, or we need to be on a major lookout. So let's go ahead and switch over to the next important thing to see, which I think is going to be lightly detailed here with some graphics in this section, but I'm going to go to an important graph in VectorVest. I'm going to go up here to the Graphs tab. Over on the left, we'll go to Market Climate from the selector. All right, now when we get here, let's start with the global picture and how that relates to when it is truly time to become more concerned or when the coast is clear. And so we have up here in the top, by default, a 50-day moving average of earnings per share on the S&P, right? We also have the ETI, or the trend indicator, for those same earnings. And I've put on the bottom here the S&P index so we can see how prices react to this information that we track. So when the 50-day moving average is rising, of course, that means earnings are rising, right? And so naturally, you would expect our ETI is rising, our earnings trend interpretation. When this tips over, that indicates that the earnings trend is softening. You can see it starts to precipitously drop here back towards 1. Now, when this falls below 1, we begin to signal bear markets are, in fact, here, right? And so when we see that, make it bigger, markets go through periods where they do not perform well at all. And that's when earnings are poor, when they're not rising, when they're falling. And then the next bull run begins as earnings trends reverse and start to become favorable again. And that's when markets get on a roll. When earnings trends begin to dissipate and turn down and your ETI heads below 1, that's when markets, again, can hit a wall. Now, this COVID situation kind of got in front of things a bit on a unique circumstance, right? But where are we now? So ETI is certainly making its way towards 1 at a pretty fast clip. When we dial into the most recent information, I've been keeping an eye here on a little bit of a new development, and that is with the 50 MA of EPS. So that has actually begun to swing up here in aggregate over the last 4 weeks. We'll see what this week brings. We've seen some interesting earnings this week, and I've got my eye on that because if it continues to strengthen, that would then mean that the downward trend is dissipating a bit, and we could see this thing begin to stave off this downward descent of the ETI. I think that's noteworthy. When I would be really fearful here is if the 50-day MA of EPS was still falling. Then we'd absolutely be on a failure rate and absolutely heading into strongly deteriorating earnings, which could exacerbate any future fall in stock market, right? And really, really see some pain. So a bit of optimism, but we don't want to be a Pollyanna here and assume that this is going to continue. But it is noteworthy and something to keep an eye on. And I find that very interesting, given, a little bit of chink in the armor with Powell indicating he might start taking his foot off the pedal even more in the future. So it's all very interesting to see this happening in real time. In terms of ultimate fear, we're not there. In terms of being concerned, we're absolutely there. And so things are not as bad as anyone perceives them to be, and things are not as good as anyone perceives them to be, is where this information leaves me right now at this moment. If that earnings trend tips over and continues to head lower and the EPS is dropping, you need to really be defensive. Whereas if that 50-day EPS begins to climb on up from here, turning our ETI around, that should lead to higher prices in the stock market. So very interesting observations here, and hopefully you're following along and it's all making sense. Now, that's just the 30,000 foot view. At the end of the day, we need a tactical approach, which will be on our market timing graph. So we just stay right here in the graph section, switch it up to market timing. All right, when we get here, again, we'll start with a bigger picture. We'll just start with the last year. And what I want to do is spend some time talking about each of the components of this graph. It's very, very important, and it's all tracked right here on the home page as well. So right here in the color guard section, we can see that today we've moved to 3 yellow lights. So that's going to put a little bit of a cautionary tone on things, since the markets did not receive some of the favorable strengthening economic news this morning. And what we see is a market that has been remarkably picking up some strength overall. So a little bit of weakness on the current situation because the markets were off and off a lot more earlier. We are now 3 ticks into the yellow. It says we're neutral. VectorVest advocates caution. Caution, right, when buying stocks at this time. It doesn't say we don't advocate buying stocks, just be very cautious. And that makes sense because our key indicators have softened up just a little bit, if only on a day-over-day basis. Now, looking back, you also get some information here where prices are higher than they were just a week ago. The short-term trend and direction and magnitude of the directional movement of the VectorVest composite has picked up some strength on a week-over-week basis. The buy-to-sell ratio, the number of stocks participating in the rally, buys well outnumber sells at 3.71. Just a week ago it was 2.6. So large numbers of stocks that weren't contributing yet are now beginning to contribute in a more meaningful way. The MTI is higher than it was a week ago. And we often talk about not only the direction of some of these indicators, but also how that relates to situations when a market might be bottoming or entering a toppy phase. But the moral of the story here so far is, with all of the indicators really pushing higher on their scaling, there's nothing in VectorVest as of yet indicating that we've actually reached a top. And so that's an important piece of information to understand, right? We should be alert that one may be, in fact, on the horizon, and that's by way of some of the lofty levels on these indicators, and let's go cover that. So let's go right over to the timing tab, and from there, market timing graph, and here we are with the 1 year again. And so I'm going to start with just price and the MTI, because ultimately the MTI wraps up all of the key indications into one single comprehensive indicator for timing the market. Okay, then we'll break into some of the individual pieces. But as we come here and we look at the markets as they're moving, we'll notice here on the bottom that the MTI tends to oscillate on the 0 to 2 scale. And it tends to find market bottoms around the level of 0.6 or below. And you can't just react to the level that very day. What it does is give you an alert that a market bottom might be right around the corner, could come imminently. Sometimes it takes a few weeks, sometimes even longer, but traditionally, particularly at market lows, you tend to be on high alert as soon as 0.6 is breached. And then as markets begin to take off from there, that's going to present the best buying opportunities. Because if you look at this information, say when the market timing indicator did bottom and started to push up, that would have been a great opportunity to buy stocks. Now, when the market goes up high enough, then you're going to get an MTI score that starts to run up into the 1.5s, 1.6s. Hopefully you've been reading VectorVest Views, and Angie Akers has kept us well abreast last week, to be included on Friday, that we're getting up into that territory where markets do in fact start searching for a top. Sometimes those tops come quick, as was the case here in August of 2022, and markets had a pretty sharp sell-off. Then what happened when the MTI got down below 0.6 and started to climb? These were great opportunities to pick up shares even if sometimes you have to hold through a week or two of lackluster performance before it truly gets going. The bottom line, the name of the game is to buy low and sell high. So how does that relate to where we are right now? We are high on the scale. The best time to have bought stocks was way back here in October. Or more recently, as we get deeper into the tactical analysis, after a pretty mild sell-off, there was another confirmed up call, for example, in early January, on January 9th. So there's been a couple of opportunities to buy stocks and produce really strong gains off this most recent market low. And so this indicator is hugely important. And hopefully just looking at this graphic now with some context is beginning to open your eyes. So when you want to load up the truck, absolutely use everything you got, to make money in the stock market is when the MTI is low and markets begin to blast off. When you want to come off the gas pedal just a bit, but still participate in any upside that might remain, is when the MTI gets up into the 1516 or higher territory. Highest we've ever seen was certainly under a unique circumstance, and that was with all of the Fed dovish interaction with the stock market and trillions and trillions of stimulus and monetary easing and just everything. You did reach an ultimate high in the history of VectorVest at 182. So the other thing to take note of here is, as these indicators get up into 1516, they can in fact go higher. And also, they can stay up here for a while, particularly when the economic backdrop is strong. So the best times to buy stocks are when the MTI is low and surging up off those lows, okay? And when you get high, see the sharpness of the rally coming into this MTI peak? I mean, the money was made early, okay? I see that the market timing graph continued to push higher, but it was a lot choppier from there. You see that? And while it did push higher, the easy money had come and gone, right? So we want to come off the gas a little bit. That makes the choppiness of what might lie ahead a little bit more digestible, right? And a lot of the gains that we're going to achieve have already been made. They really have. Same thing here after the COVID collapse, right? This thing shot up, and while it just continued to shoot up because of all of the continual stimulus, the early surges in any of these rallies is where a lot of that money is made. So hopefully that comes across well. And then we can break this up into more individual pieces with things like the buy to sell ratio. The buy to sell ratio is an extremely valuable indicator in its own right, as it's tracking the number of buys compared to the number of sells. And what we see here is we're starting to hit new high watermarks on this indicator over what we've seen recently here in the last couple of years, right? And so that is encouraging, actually, that tactically markets may in fact still have some upside on the table, because we're seeing more stocks participating now than have participated at any time since the last stages or latter stages of the COVID 2020 blast off. So we're kind of in blast off mode as indicated by the buy to sell ratio, although not the kind of blast off yet by way of 3.78 that we have seen in years past, say even 2016, which hit a blast off level of 6.6 at that peak. So it's good to see things strengthening here, though. That lends itself again towards, we want to be cautious, but we don't want to give up on any upside that still might remain here. These indicators are hitting higher watermarks, okay? We come to the relative timing, same story there. We're starting to see actually higher watermarks being achieved here over that most recent run up in August of last year. And so that indicates here again that the short-term trend is stronger now than it was even on that prior big surge back then. And so there's no reason to fully come off of the gas pedal just yet. And then we can get right down to brass tacks, your market signal. So we'll start here with the confirm calls. And yeah, let's dial in. These signals are built to save your bacon when markets are in the worst of downward falls. And they're also built to capitalize on upwaves in the stock market. What we're looking for here is the stock market to be pushing higher week over week, and the buy to sell ratio to confirm that by getting above 1. And so when this indicator is down around 0.2, that's another indication that we're searching for a bottom. There's no ultimate topside guidance. In other words, it's not like the MTI where we have an overbought type situation where we start to look toppy. What it does indicate, though, is the strength of the rally as it continues. And again, it's picking up strength. But in terms of this signal, it just needs to get above 1 so that you've got the broad market support behind the 2-week price movement. So in other words, the rally is broadening out enough to where more stocks have turned into a buy recommendation, right? And that's ultimately then when we have always liked to, if we hadn't already, pull the trigger. That's your confirmed signal. And so if we just take this signal and we look back at it, you'll see that in bull markets, boy, there's some tremendous profit potential with these up calls. It's really going to save your bacon when the composite falls week over week and the buy-sell ratio is below 1 to get on the defensive, right? And there's still even opportunities in some of the worst markets to make money to the upside. So it's tremendously valuable, right? And so right now we're up. And we said that earlier the name of the game is to buy low and sell high. Well, let's just take confirmed calls. I'm already running pretty good length on this video. So I'm going to get out of here. This last up call was January 9, okay? So I'm going to go over here into Unisearch. And I'm going to end up here on bottoms up on January 9. And I'm going to do that intentionally. VectorVest provides all the information you need to make money on a daily basis, and lots of it, okay? So if we go back to January 9, in VectorVest Views, we come down here. You might wonder why we list all these strategies in the views on a daily basis. Well, when you get a market signal, if we come in here, we say, all right, well, look at this strategy. Good grief, it was up 21% today. I mean, my goodness, the stocks are screaming. And also, it's done well over the last 5 days. So this is a strategy that's up on the day, up over the last 5 days. Looks like cryptocurrency stocks. Boy, those have gone on a run. Some of you might consider those a bit flaky, right? I get that. So if you want to go pure stocks here, bottoms up. Let's go right back over to Unisearch. And if we run it as of that date, okay, I realize there's going to be slippage here. That's not the point. The point is you've gotten signal that the coast is clear. While we didn't focus on nailing the bottom here, where the results get even better, you've got signal, and tactically it's okay to buy, right? We quick test. This strategy is up 23%. And certainly some lower price stocks in here. So where are some other places I can look in VectorVest to find strategies that are going to be work well for me when the time is right? Well, Trading System Viewer. If we come over here, Comeback Kids, I mean, has been on an absolute tear. So if we go back over to Unisearch here and go find the Comeback Kids, and quick test the top 10 stocks, yep, 17%. And you still have some lower price stocks in here at times. Look, if you want, we have a Derby Ready version. That's really the one that we're tracking. That's going to give you even better results. Okay, so make sure you look for the right one. The DR, I would suggest, and if some of the stocks are still too low priced, go to 10. 10 minimum. Okay, it's up 21. If some of those are still a little too low priced for whatever reason, just keep changing the price to where you're comfortable. 23%. 10 out of 10 winners, okay? And so VectorVest, ladies and gentlemen, is all you need to understand where you stand in the stock market, and it gives you all the tools you need to tactically take advantage of the situation from an optimal standpoint. So while we do need to be cautious here and now, lots of money could have been made as these rallies began. And the mode that we would be in now is, as some stocks hit the sell recommendations by the way that I'm managing them, maybe I don't replace as many stocks here going forward and begin to take risk off the table, but still participate in any upside that remains. And at the end of the day, guys, you want to be an optimist. Don't let all those talking heads on CNBC get to you. You want to be an optimist. You don't want to be a fool, but you want to be an optimist. And that's, we truly believe that you have to be an optimist to make money in the stock market. We'll see you next time here at VectorVest University. See you then.